Imagine walking into a bullion dealer to buy silver, and they tell you, we're completely out of stock. Now imagine that's not just happening in your city, but across an entire country and then across the world. London, New York, Mumbai, everywhere. The silver vaults are empty. In December 2025, silver prices hit an all-time high of $83 per ounce, then crashed 9% in a single day. Today, I'm going to tell you the incredible story of how a religious festival in India triggered the biggest silver market crisis in 45 years, and why traders are saying the market was all but broken. If you've invested in silver or you're thinking about it, this video will completely change how you see this market. Let's dive in. The story begins with Vipin Raina. This guy runs trading operations at India's largest precious metals refinery, MMTC Pamp India. He's got 27 years of experience in this business. He's seen bull markets, bear markets, squeezes, crashes, you name it. In October 2025, he knew demand was coming. Every year during Diwali, hundreds of millions of Indians buy gold and silver to celebrate the festival and honor Lakshmi, the Hindu goddess of wealth. It's one of the biggest precious metals shopping seasons in the world. But what happened this time absolutely blindsided him. In the first week of October, his company, India's largest precious metals refinery, ran completely out of silver for the first time in its history. Not low on stock, not delayed shipments. Completely out. And he wasn't alone. Dealers across India were calling each other, desperately trying to find any available silver. The answer was the same everywhere. We have nothing left. Vipin Raina later said, and I quote, "This kind of crazy market where people are buying at these levels I have not seen in my 27-year career. So what caused this insane spike in demand?" The answer is actually pretty fascinating, and it shows you the power of social media in modern markets. Back in April 2025, an investment banker and content creator named Sarthak Ahuia posted a video to his nearly 3 million followers. His message was simple. Look at the gold to silver price ratio. It's hit 100 to 1. Gold has had its rally. Silver is next. The video went viral during Akshaya Tritiya, an auspicious day for buying gold in Hindu culture. But the real explosion came during Dhanteras in October, the biggest day for precious metals purchases in India, right before the FOMO was unbelievable. Indians who normally bought gold started pivoting to silver because it was more affordable and the social media hype told them it was about to explode in value. Amit Mittal, a general manager at MD Overseas Bullion in New Delhi, said, "It's never been like this before. The demand this time for silver has been humongous." In Mumbai's famous Zaveri Bazaar, bidding wars broke out. Wealthy buyers didn't care about price. They just wanted to get their hands on silver before it disappeared completely. Here's how crazy it got. Normally, the premium for silver in India over London spot prices is just a few cents per ounce. During this crisis, it shot above $5 per ounce. In some places, even higher. Dealers with 28 years of experience said they'd never seen premiums like this. Now, you might think, okay, India ran out. They'll just import more from London. Problem solved, right? Wrong. Because when Indian dealers turned to London, the world's largest silver market, they discovered something shocking. The vaults were empty too. Well, not exactly empty. London's vaults held over $36 billion worth of silver. But here's the catch. The vast majority was locked up in exchange-traded funds owned by investors who weren't selling. You see, 2025 saw the rise of what traders call the debasement trade. With concerns about US dollar stability and inflation, investors piled into precious metals as a safe haven. In 2025 alone, ETFs absorbed more than 100 million ounces of silver, taking it completely off the market. And to make matters worse, China, a key silver supplier, was closed for a week-long holiday right when India needed metal the most. So Indian dealers were stuck. They needed silver desperately, but London didn't have any available to sell them. By early October, even JP Morgan Chase, the world's largest precious metals trader, told at least one of its clients, "We have no silver available for delivery to India in October. Earliest we can do is November." That's when things started to break. The London silver market, where global prices are set and where the world's biggest banks trade in massive quantities, was experiencing a squeeze unlike anything traders had seen in their careers. The overnight cost of borrowing silver shot up to annualized rates of 200%. Let me repeat that. 200%. The big banks that normally provide liquidity started stepping back. But ask spreads, the difference between buying and selling prices became so wide that trading became nearly impossible. One senior banker described how clients who had borrowed silver were calling repeatedly, and when his bank couldn't provide a price to roll their positions forward, clients started literally screaming down the phone lines in frustration and panic. Another trader described something that almost never happens in such a large, competitive market. He could buy silver from one bank at their asking price and simultaneously sell it to another bank at their bid price for an instant, risk-free profit. That's a massive red flag that the market has completely broken down. Hobin Kovenbashko, CEO of Swiss precious metals refiner Argaharius, said, "There's more or less little to no liquidity actually available. We have basically stopped all silver intake that is not committed contractually back in India." The situation was so dire that major asset management companies took unprecedented action. They halted new subscriptions to their silver. Think about that. Kotak Asset Management, UT Asset Management, State Bank of India, all stopped accepting new investors into their silver funds because they literally couldn't get physical silver to back the positions. Fund manager Satish Dandapate watched the crisis unfold in real time. He said, analysts, bullion dealers were all giving bullish calls on silver in Indian media in a way that has not happened in the last 14 years. The FOMO factor has worked. Now, this wasn't just about India and this was a perfect storm, multiple factors converging at exactly the wrong time. Factor number 1, the solar power boom. For the past 5 years, silver demand has exceeded supply from mines and recycling. Why? Because silver is essential in photovoltaic solar cells. Since 2021, solar demand alone has more than doubled, creating a deficit of 678 million ounces. That's against total London inventories of about 1.1 billion ounces at the start of 2021. Factor number 2, Trump tariff fears. When President Trump took office in 2025, traders feared his reciprocal tariffs would hit silver. So what did they do? They front-ran potential tariffs by shipping more than 200 million ounces from London to New York warehouses just in case. Factor number 3, the debasement trade. Fears about dollar weakness and inflation drove over 100 million ounces into ETFs. Factor number 4, India's Diwali demand, amplified by social media into a buying frenzy. All these factors combined to drain London's reserves to dangerous levels. By early October, the free float, the silver not owned by ETFs and actually available for trading, had dropped to less than 150 million ounces. Meanwhile, the London market trades about 250 million ounces every single day. The market was running on fumes. As prices spiked in early October, traders scrambled for solutions. The obvious answer was to bring silver back from New York. In ideal conditions, this takes about 4 days by silver on COMEX. Verify it meets London standards, load it on a commercial flight, and move it into London vaults. But there were risks everywhere. Customs delays could run into weeks. And if you promised to deliver silver in London but couldn't get it there in time, you'd be on the hook for those eye-watering 200% borrowing costs. Still, desperate times call for desperate measures. In the past 2 weeks, COMEX inventories dropped by more than 20 million ounces, the largest drop in over 25 years. Logistics companies cashed in to jacking up their prices as silver traders had no choice but to pay. But many traders were still hesitant. Why? Because there was always the risk that Trump would slap tariffs on silver, sending New York prices soaring again and making the whole arbitrage trade blow up in their faces. Throughout October and into December, the pressure kept building. Silver prices went absolutely parabolic. They hit $54 per ounce in mid-October, then kept climbing. By December, spot silver briefly touched an all-time high of $83.62 per ounce. That's a 170% gain for the year, making silver the third most valuable asset in the world. Both silver and gold were on pace for their best yearly performance since 1979. How big is this crisis historically? Experts are calling it the worst silver squeeze in 45 years. The last time something this severe happened was 1980, when the Hunt brothers tried to corner the silver market. Exchanges had to prevent traders from taking new positions to break the squeeze. In 1998, Warren Buffett's Berkshire Hathaway bought about a quarter of the world's annual mine output, triggering a major squeeze in London. The London Bullion Market Association had to change its delivery rules to ease the pressure. This time, the LBMA says they don't need to intervene because this is a genuine supply shortage, not a logistical bottleneck or market manipulation. Then came December 29, 2025, a Monday that silver traders won't soon forget. The CME Group increased margin requirements for silver, gold, platinum, and palladium futures due to recent volatility. That was the trigger. Profit-taking began. After such an insane rally, investors started cashing out. Silver plunged 9% in a single day, its biggest one-day decline since February 2021. Gold fell 4.5%. But here's the thing. Many experts believe this is just the beginning of a larger correction. James Ford, who runs the Pragmatic Investor, is advising investors to dollar cost average out of silver. He argues the risk-reward is now unfavorable and warns that while momentum could push prices toward $100 per ounce if enough people believe it, a substantial pullback of potentially 50% could happen in the next few months. On the other hand, some analysts remain bullish on the fundamentals. David Mager, director of metals trading at High Ridge Futures, said, "I believe that the underlying fundamentals of supply constraints remain factors in the market, and we still have positive prospects going into 2026. And there's a new wild card that just entered the game. China announced that starting January 1st, 2026, companies will need government licenses to export silver from the country. Even Elon Musk weighed in, saying, this is not good. Silver is needed in many industrial processes. He's right. Silver is critical for electronics, medicine, renewable energy, you name it. China's export controls could add yet another layer of supply pressure to an already strained market. So where does this leave us? The silver market just experienced a crisis that traders are comparing to events from 45 years ago. A perfect storm of industrial demand, investment flows, geopolitical uncertainty, and social media-fueled retail buying created the most severe supply squeeze since the Hunt Bros era. Silver went from under $30 an ounce at the start of 2025 to over $83, then crashed hard in a single day. We're seeing a market that's clearly broken, clearly stretched, and clearly at a major inflection point. For investors, the key takeaways are clear. Silver is incredibly volatile, driven by both industrial demand and investment flows. The supply constraints are real. Solar, electronics, and other industries need it. But short term, the correction risk is very high, and geopolitical factors like China's export controls add massive uncertainty. If you found this deep dive valuable, hit that like button. Subscribe so you don't miss future coverage of major market events like this. Drop a comment and let me know. Are you invested in silver? Are you buying this dip or staying away? What's your strategy? And if you want to see similar breakdowns of gold, crypto, or stock market events, let me know in the comments. Share this with anyone interested in commodities or market dynamics. This is the kind of real-world financial drama that most people never hear about. I'll see you in the next video with another fascinating market story. Until then, invest wisely, stay informed, and take your Kati.